so that it's over there. In my participants list. Good afternoon, everyone. I don't know if y'all can hear me yet or not, but I'm glad that to see some of you are already signed on. It's at 1 o'clock now, and I know we're waiting for quite a few more. So those of you who are already online or in the Zoom in our webinar today, if you would, we're going to do something new, and that is, if you would please go to the chat area and enter your name and who you work for and where you are, because we have folks actually from all over the state joining us today, which is extra exciting. But if you would just enter your name, your company, where you are, and then one piece of information that you would like to share about about life right now, what you're learning about COVID-19, or what you're learning about how to manage through this, or what you're learning about your companies that you work with, your clients, or what they're asking about. Just pop that into the chat room so that we can kind of start to have a little more personal piece to this. Since we have changed to the webinar format and we don't get to all see each other, this will be a way for us to communicate. So I will see, I see Earl is already here, so welcome, Earl. And Earl has already submitted some questions, so we will cover those in a little bit after Scott does his presentation. But again, I am Erin Oots. I am the facilitator for the Upstate Entrepreneur Ecosystem. We are here hosting our 4th webinar to connect our entrepreneur ecosystem and our entrepreneur support providers as we learn and support each other and support our clients through this this time of quarantine and unprecedented change. But one of the things that I learned that I would like to pass on to you is I was talking with Andy Stoll yesterday, who's the director of National Entrepreneurship Ecosystems for the Kauffman Foundation. And he said that a colleague of his called us entrepreneur support providers the healthcare workers of the economy. So if anybody is questioning what you're doing, you can just say we are the healthcare workers of the economy. And that's how important what we're doing is to our companies and helping to bring all of these small businesses, medium-sized, large businesses back online so that they can be healthy and our economy can continue to thrive. So just a little tidbit from Andy, passed on. But today we are here with Scott Patterson. He is with Core Financial Resources, and he is going to talk about tax changes that have come out of the CARES Act and how we can use those or advise our client companies to use those in their businesses. We have done as I said, we've done 3 of these already, and we are going to do 3 more after this, or at least that's the plan. We have a potential person for next week, but they're not confirmed. And we have some ideas for the next 2 weeks. But if you have something that you want to hear about, or you think that you have some questions, or you think that other people would like to know about, please put that in the chat room as well. That's how we got our CDFI lenders last week. Brendan Buttimer, thank you, Brendan, said that the message of their support isn't getting out. So we were able to coordinate that webinar for y'all last week. But I am going to see who all's here. Thanks to you. Oh, I see lots of good folks are signing in. I appreciate that. Today, Scott will speak first, as always, and then we will have questions afterwards. Dean will moderate the questions. And because we are in this webinar format, if you will please use the Q&A button at the bottom of your screen to type in your questions, that would be great. All right, So I am going to turn it over to Scott, and I'm typing my information too. So Scott, thank you so much for coming and joining us today. I'll turn it over to you.
Oh, thanks for having me, Aaron. I look forward to this for a couple of weeks now, because as we've all seen, this coronavirus pandemic is forcing adaptation for all kinds of business owners. Some of them are fighting for survival. And as we talk to those business owners, we've done nothing basically for 2 or 3 weeks, but help business owners. And if there's a consistent message we're hearing, is that they're feeling overwhelmed and sometimes lost and certainly fearful. There's a few that are just overrun with business and don't know, have never had that level of business before, but there are a lot that have been shut down and have drastic drops in revenue. And unfortunately, many of the business owners are counting on the evening news and social media to help guide them. And unfortunately, that's just led to more frustration because things change so rapidly. You know, you see something on Twitter today or the evening news, and it was out of date by the time it actually got on air. So the business owners are wondering where to turn for support. Who do I ask questions to? And what we've all learned is if we don't have a trusted advisor, hopefully at the bank, right? An accountant or some other business advisor, we can be flailing around looking for advice. And we understand that at Core Financial Resources, because we're a small business too. We operate no different than any of the rest of these guys. The only difference is our function and our drive is to help business owners every day with their most complex tax and accounting situation. And this time is really no different. So today, what I wanted to do is to provide you some updates on what the government's response to this pandemic has been, what opportunities exist. And while this can't substitute for individual advice, and I can't cover every detail, hopefully you'll get a little bit of an overview. So the first thing to cover is what the government's response has been. So there have been 3 acts and we've got 4 impending. So first of all, it didn't directly impact all of us, but there was a bunch of emergency funding for federal agencies that happened. Next, we got the Families First Act, and that did a lot of things with more federal funding and nutrition waivers. Unemployment insurance was tweaked, and paid sick leave and medical leave were altered. The big one that we're all talking about, though, is the one that came in the end of March, the CARES Act. And that's the one that you hear most of the news about, because that was the $2 trillion stimulus that made those individual payments that are happening now. They put changes to unemployment and the PPP and a bunch of tax changes all came out of that act. And any day now, we're waiting for a 4th one to come up. They're talking about more PPP funding. Surely you've seen this. What other things get tacked on is a little bit up for grabs, but I would be surprised if we get out of the week without a 4th act to help that, to help us all out. So those were the 4 big legislative changes that happened. What I think we need to look at business owners and say is there's about 7 things that you need to pay attention to. And I know it probably feels like 700 things, but I boiled them down to 7, you know, and not necessarily in order of importance. Do I have them numbered here? Just numbered so we can talk about them. One of the big one is employment and legal issues. You know, if we have employees and we have trying to decide furlough, layoffs, sick leave, all those things. Tim at the top had a great presentation with Michael Nail on that subject. You ought to go back and watch that. That was fantastic. Earl even had a great presentation on the EIDL and the PPP. certainly since he gave that, there's been all kinds of clarifications and revisions out. That seems to be changing with the day. But so those are obviously big topics, but what I want to focus on is this 3 through 7 period today. So what tax changes have come out? What else has happened? The second one is how can we support our employees, the people that work for us that are going through tough times now? Number 5, what accounting reports ought people be paying attention to? You know, if you have QuickBooks, you have an accountant, what should I be looking at? What's going to be important to me? Number 6 is a hot topic. So if I get the loans, if I get stimulus payments, how is all this going to affect my taxes down the road? Am I going to have to pay? And then last but not least, once I get these loans and we start to see the PPP money hit the streets, what record keeping do I need to do? What's going to be important to make sure I get forgiveness? So topics for today, items 3 through 7. So kick it off, key tax provisions. So the first one to talk about is the employee retention credit. So that was a payroll tax credit that you can get up to 50% of your compensation of an employee paid. Definitely a centerpiece, something to know about. There's also payroll tax deferral. So if you're unable to get the loans or you don't qualify, you can defer some of your tax payments off even as far as 2022. 2 other tax provisions. There were changes to qualified improvement property. We'll talk about a little more detail what that is. Net operating losses. So one of the other changes from Congress was that you can actually carry losses back. That provision was lost a few years ago, but they brought it back so that if you had losses from 2018, 19, or 20, you possibly can get a refund. We'll talk some more about that. The 2 others at the bottom, I haven't provided a lot of detail on in this presentation, but thought I would include them, is they increased the business interest limitation, another rather new tax provision that prevented some people from getting refunds in the past. Business interest was limited, and now that cap has been raised. Also, business losses could have been not allowed to give you a refund based on your situation in prior years, but now that has been lost. Those last 2 will affect high wage earners and much more than it will your average business owner on the street. All right, so let's dig into these provisions just a little bit. The 2 that I had at the top there, the employee retention credit. So I've got 3 things here for you to look at. What is it? It's a refundable tax credit. You can get up to 50% of up to $10,000 in compensation. So that's up to $5,000 per employee between now and the end of the year. All right. So especially if you don't get the PPP, that can be a very helpful offset. Who's eligible for this? There are some eligibility requirements. Your business needs to be either partially or fully suspended. So that can apply to quite a broad range of businesses. Or you see your gross receipts decline by more than 50%. Now this credit will go away once you see your gross receipts go back and exceed 80%. So there's a lot of details that you probably need to check into. A couple things to look at is that if you have 100 employees, there are some limitations to apply. So again, I couldn't put all the things in here, but just wanted to kind of give you the highlights. There's also this payroll tax deferral option where you can not pay the employer share, the 6.2% of Social Security tax. Now, it's not the Medicare part, that's the Social Security part, and that can be delayed till the end of 2021 or 2022. It's available to self-employed people and employers alike. So the one thing you just want to watch, and it makes me nervous a lot of times with these, when we talk to people about deferring payments, the question is, how do you know you're going to have the money available down the road? Because this doesn't alleviate you of the responsibility. It just allows you to pay it later. So it can make for a interest-free loan, but you definitely don't want to come up on the due dates owing. These two credits, you are not able to use those if you get a PPP loan. So you can't get a PPP, get forgiveness, and do both of these things. This is an either or situation. So I got the PPP loan is option A, option B. I can use both of these, but I can't use either of these if I get the PPP loan. The second round of tax changes I wanted to talk about is this qualified improvement property and the carryback losses. The interesting thing to me in both of these cases is these changed the 2018 tax rules. So not only did they change 2020, but they changed 19 and 18 alike, which, you know, Congress is really reaching back, trying to give you opportunity to refile returns and get a refund that might provide you some liquidity for today. So qualified improvement property was one of those things when the laws changed for 2018 that Congress screwed up. It was a mistake. They had intended for this to be the way that improvement property worked all along, but they made a mistake and they finally got around to fixing it. So what we're talking about here is people who've made improvements to an interior portion of a building. Think a restaurant build out or a retail storefront build out, those sort of things. What you should have been able to do and now can make the changes to do is those improvements qualify for 100% bonus depreciation. So if you did this in 2018, your accountant likely told you you're going to have to write it off over 39 years, and that just seemed like forever. But now 100% could be written off in the year that you placed it into service. So that's the good news. If you don't want to write it off that year, it's now a 15-year period to write it off rather than a 39. So a couple of options that are really, really good. And that could even combine with this other topic of carryback losses. So let's say we went back to 18, we looked at that improvement, we spent $75,000 building out a new restaurant. We want to write it all off, and that caused that year to have a loss, right? We lost money. We were due a refund of some of the taxes we paid. What do? We use this second provision to carry back our losses to the prior tax years and ask the government for a refund. Now, of course, that's really hard to do now that the government shut down. So they set up a special fax line and some other things to take care of that for us. But just think for a minute what opportunity carrying back losses might do for a business owner, right? Right now, on 2018, 2019, 2020 rules, our tax rates have all been reduced. That was part of the new tax changes. If we're allowed to carry losses all the way back prior to that period, we can carry them to the time when tax rates were higher. This might be a great way for business owners to get some much needed money around this time if they can't get it from any of these other sources. So definitely keep an eye on what can I go back and change, and did I have losses that I might want to take backwards rather than forwards. The next topic to cover, tax-free employee support. So for those employers who want to help their employees have some money to do so, they may be thinking, what can I do to help an employee? You know, we're seeing employees with all kinds of needs, right? We got kids out of school, so we got to be at home. We've got expenses because we have to work from home. There are people dying and needing funeral expenses paid. There are all these kind of needs. There's even student loans that, you know, that when money's down, we're trying to wonder, how do we pay these obligations? So there's two key points here. One of them's is a new part of the CARES Act, and one of them's not. So the student loan payment is a change to a program that's existed for a while. An employer could pay an employee up to $5,250 towards them going to school, but that only applied to current education. The change that's enacted for this period of time is they can actually now help the employee pay for the actual loan cost. So you can pay that loan for the employee, and the good news is that's tax-free to both employee and employer, right? So the government's willing to subsidize that for you. Got to watch out if you're the owner of the company and paying for your own family members, but if not, that could be a great way to support people trying to make loan payments during this time. The second one, the disaster relief payments, is not really a new thing, but it was enacted when the national pandemic was declared a disaster, a national disaster. And this allows employers to pay expenses really reasonably related to the disaster in a tax-free manner. So again, no Social Security, no Medicare, no income tax to be paid on these. And so things that it can cover: medications, hand sanitizers, disinfectants, all the things that are extra expenses related to this pandemic. And you see on the slide, childcare, work from home expenses, and heaven forbid, even funeral expenses. If you've got the money and looking for a way to support employees, these are both very, very good ways of doing that. If you elect these options, you want to work closely with your payroll provider to make sure that these are listed right within your payroll system. The next thing I want you guys to help business owners understand is, now more than ever, it's time to know your numbers. We're all fans of Shark Tank. I think, if you're involved anywhere in your small business, you've seen it. And that's one thing they preach on that show, right? Know your numbers. And of course, as accountants, we preach that to business owners all the time. This time more than ever, that's an important message. So when it comes to knowing your numbers, somebody might ask, what numbers am I supposed to know? What am I supposed to watch? I know a lot of the business owners we've talked to have said, I don't know what I'm supposed to be paying attention to. So these are 4 things that are important during this time. Number 1, well, let me interrupt and say, this is not your standard profit and loss and balance sheet financial statements that we look at during good times. These are specific ones that are important while business is down, and we're under this quarantine pressure, right? First thing we want to know is cash flow. We want to understand how much money's coming in, how much money's going out, and how much we've got in reserve to cover expenses that we don't have income to cover. Because we want to know how long our cash is going to last, right? Cash flow and where that's going is very, very important. And it may be important to look at this on not a monthly basis, but a weekly basis a lot of times. What money's coming in? Could I make more money come in? What money's going out? Could I make less go out? Those sort of things. A second one is our payables. And we want to keep track of what is due when. And we want to control those, right? So we want to work with our suppliers and our vendors and see when payments need to be made. If we can defer those and save some of our cash flow today, that might be a great thing. But knowing when things are due is only going to help us manage our cash flow. Another very important thing to know is a break-even analysis. What do I have to do to break even, right? Yeah, I may have cash that needs to go out the door today. I may have some that needs to go out tomorrow. But what do I got to do to break even? How much money do I have to make today, tomorrow, this week, this month to just break even and keep myself afloat? It becomes a very important thing to keep up with. And finally, if you can get to it, a forecast, right? What does tomorrow look like? What does next week look like? What decisions do I need to make to be able to survive down the road? That forecast becomes an important thing to know. How long is this going to be able to work? What do I need to do to be able to support next week or next month? Fortunately, we all wish we knew when we were coming out of this, but we don't at this time. So the forecast may be very short term. It may be a day or a week at a time. That's fine, but at least empowering yourself with the knowledge. What cash needs to go out of the door today? What cash is coming in the door? What payables do I have coming up that I'm going to need to have cash available for? What do I have to do to break even? And what do I think is going to happen in the future are kind of the 4 key reports that we're talking to all of our clients about managing. This is probably not something you can just go into QuickBooks and hit print on. These are things that might take an Excel spreadsheet and a little bit of financial wherewithal to get done. All right, next topic, taxation. So this has been a hot one for us, is people calling and saying, well, it's great, all this money's flowing out of the federal government. Am I going to have to give it back to them? I said, give it back. What do you mean give it back? And the question is essentially, am I going to have to pay tax on all this money? And the answer, like every good tax question, is it depends, right? So I'm going to step you through a couple here, and we'll talk about them. So the hot topic, PPP and EIDL loans. So if you get a loan, it can be, actually doesn't have to be those 2 areas. It can be a loan from your grandma. It can be a loan from the local bank. Any loan is not taxable income to a business, right? That's not new. That's just the way it is. Loan income is not taxable. And of course, a loan is something that's going to need to be repaid. When you repay it, since it is not income when you received it, principal payments back to that loan source are also not deductible. All right, so not taxable coming in, not deductible going out, but any interest that you have to pay on that loan, of course, would be deductible. So the loan itself is not a taxable thing. You say, but wait, I've got this for EIDL, I got a few $1,000s. I was hoping it was going to be 10, but I ended up with a little something less because I have less employees, and that's a grant, and I'm not going to have to pay it back. But am I going to have to pay tax on that grant? And the answer is yes. Grants are taxable to the recipient. And I know that's not what you wanted to hear. And I know that the EIDL grants are uttered in the same breath with PPP loan forgiveness, but they're a different thing. Grants by nature are taxable income. Now, when you go spend that money on an employee or whatever you need to spend it on, that's going to be a deduction. So you may have nothing to pay tax on, but the grant is income. Expense will be a deductible expense, of course. PPP loans, a new animal that we are struggling every day to figure out answers to. There's a lot of conjecture and a lot of guesses and not a lot of answers. So here's what we know is that the amounts to be forgiven under the PPP loans are expressly not to be included in your income. We know that for sure. What's unclear is if the old IRS section, and this is not a new thing, there's an old IRS section that's been litigated in tax court before that essentially says that expenses paid for with tax-free income are not deductible. So there's been no mention of this out of the SBA or the IRS, is if that code section applies or if Congress intended for us to get a free pass around it. So it's unclear if expenses paid with tax-free money are deductible. Hold for that one. But we know the income that is forgiven from the PPP is not taxable income. So hopefully a little bit of good news there. Other stimulus. So we talked earlier about payroll and the payroll credit. So I could have paid an employee $10,000, and using that employee retention credit, I could get a refund from the government for $5,000. So I've got some taxes that are not going to need to be paid, or even a refund that's given. So is that taxable income? And the answer is not exactly. What it should do is it just means that you didn't actually pay the wages, right? If I paid an employee $10,000 and I got 5 of it returned from the government, I really only paid them $5,000. So that's all I'm going to get to deduct. I don't get to deduct the 10,000 because I was reimbursed. I was given that money back. Next one on the list is the individual stimulus. I know we're talking a lot about business owners, but they're individuals too. So that economic incentive payment, that's not taxable. You don't have to worry about it. Unemployment, right? There's a lot of, even business owners can get unemployment now, right? If you're self-employed particularly, you can go file for unemployment. Unemployment income is taxable. And when you apply for it and get it, you are given the opportunity to do withholding. So I would suggest you do that, because unemployment received as an individual is taxable. The other side to unemployment, which most individuals don't understand, is that employers are actually the ones that pay that unemployment insurance. So with that, what you have been taught all along is that if employees claim unemployment, your rate's going to go up, right? Unemployment insurance operates kind of like a swimming pool, right? You got to fill up the pool. If an employee comes by and empties it, you've got to fill it back up. And that happens by the unemployment agency, Department of Employment Workforce, raising your rate and making your tax go up. Well, they've told us that during the shutdown, the quarantine period, that rate is not going to go up. It's a little unclear what's going to happen once things return to normal. Will it affect your rate if someone collects, well deep into the year? But they've definitely said during this period of quarantine, it will not affect your rate. The only other thing to watch out for is we've seen a couple of states that are kind of running out of money in their unemployment system. And when unemployment runs out of money, they go to the federal government and ask for some more. And when that happens, your federal unemployment goes up. So we're expecting some states to borrow money from the federal government, and employers in that state actually have to pay more on their federal unemployment tax at the end of the year. Don't know if that's impending for South Carolina. Haven't really heard anything about it, but something to keep an eye on for sure. All right, so that's it for loan taxation. Final topic I wanted to cover with you here is record keeping. So this is a big one. We were helping some people close loans in our office today, and the big question that we're getting is, now that I've got these loans, what records do I need to keep? How do I need to treat the funds? So I've got a few points here for you. This is another one where I don't have all the answers, and I'm willing to admit that to you. They're changing the rules seemingly every day. And so I wouldn't be surprised if we get guidance 3 or 4 weeks from now from the SBA, and some people a little upset that several weeks have come by without the rules being clear. So the first point that I'd like to make is have a good relationship with your loan officer. At the end of the day, you'll be providing them the documents for forgiveness, and they will be processing them. So if I tell you I think this qualifies or that qualifies, it really doesn't matter what I think. Talk to the loan officer and don't let them pass the buck. I've had several that say, go ask your CPA. And really, while I know a lot of stuff, asking an accountant what the loan officer will eventually forgive is probably the wrong approach. The buck's gonna stop with the loan officer and what they're comfortable with, right? If there's a gray area to be had, it's gonna be in the loan officer's gut. So make sure you understand what they're gonna be willing to accept and what they're not. Now, granted, they're not gonna have all the answers either, and they're probably gonna hem and haw, but I'm asking you to press the loan officer a little bit, because they're going to make the final decision. We've heard a lot of people say, maybe I should open up a separate bank account. Should I keep that money separately and get a separate checkbook and do payroll out of there? And the answer is sure, there's nothing wrong with that. If that will help you, that'd be great. Is it required? I see nowhere that that's a requirement. At the end of the day, there's this concept of money where, you know, just because I loan you $50, as long as you give me $50 in return, I don't care if it's the exact same $50 or not. So the important thing probably is not that separate bank account, but if it helps you out, don't let me stop you. I just don't see that it's a requirement. Next point. What's allowed? So, well, I can't cover all of the possibilities. Knowing what's allowed before you spend the money and not asking 8 weeks from now is of utmost importance. So this is where you want to do your homework. You're on the clock by the time you get the loan money, right? Especially with the PPP. I've got 8 weeks to spend the money on the right stuff, have the right amount of staff, paid the right amount of money. I don't have time for a whole lot of mistakes. And particularly if I'm struggling for cash, I may not have cash to recover from a mistake so that I can get a loan forgiven. So you want to understand what's allowed, when it's allowed, and how it's going to be counted right up front. There's going to be no substitute for, oops, I didn't know. And as I said, one of the requirements is not that you spend the money on the right thing, right? And then let me back up and say, you know, we think this sounds easy when I first heard it, it did, right? So payroll, rent, utilities, interest. These all sound like really simple terms, but when you dig into it, there are a whole bunch of things that, in gray areas where you wonder, well, does that really count as a group health insurance expense? Is that really part of my payroll? There's a lot of gray area to be had. So you want to talk with that loan officer and try to understand what they're comfortable with and what they will approve. The other part in there that a lot of people forget is not only do I have to spend it on the right things in the right relationship, but I've got to also maintain a team paid what they used to be paid. So I've got to maintain, for the PPP forgiveness, I've got to maintain my full-time equivalents, right? I've got to do the math and know, compared to the period last year, do I have the right amount of staff, and have I not reduced their income by more than 25%? Because if I do those, even if I pay money to the right things, I still might not get all of that loan forgiven. And, you know, at the end of the day, what we want is forgiveness, right? That's what we're here, right? There's 8 weeks to get the forgiveness done. And while I have quite a few questions on how the math on that forgiveness is going to be done, we're on the clock. We got 8 weeks, and there's not going to be any woulda, coulda, shouldas or going back. So we need to do the best we can to understand each individual situation, work with our loan officers. If you've got accountants that can help, great, but we got to know that formula because we're on the clock and it's got to happen, right? So those are my 5 suggestions as far as record keeping. At the end of the day, if you don't have good record keeping, or the business owners you know are kind of lackadaisical, and I typically like to spend February getting my receipts together so I can give them to my accountant in March, probably going to have to change that behavior. We need to know our accounting probably week in and week out so we know how we're advancing towards this eventual forgiveness goal. It's not going to be a time to look back and say, oh, I'm sure I did it. I got the records around here somewhere. So real important that you pay attention to the record keeping over at least your 8-week PPP period. Now, if you got the EIDL, is all this stuff still apply? Yes, EIDL and the disaster loan has certain rules and can only be spent on certain things, right? That can only be spent on financial obligations and operating expenses that could have been met had the disaster not occurred. So it's still important to keep records and know what the money was spent on, even if you got the other economic impact disaster loan. So those were my topics. Here's a recap of those 7 things. And guys, we know that this is forcing adaptation for all of us. And, we keep getting bombarded with these "together we'll survive" messages, right? There's that big telecast on TV. At the end of the day, what we look for businesses is not just to have them survive. We want to help them thrive during this period. We don't want those feelings of fear to creep in and paralyze us. We want business owners to get up every day, be intentional about their business, and pay close attention to these 7 things here, and have a plan. Know what you can do to make your business the best it can be. And if they don't have trusted advisors, give us a call. That's what our business is all about, is helping small business owners make good decisions and thrive. Again, we're a small business. We do this too. This is not any different than what we do every day. So with that, I'll turn it back over to Dean and Aaron.
Great. Thank you, Scott. Very, very informative. A lot of information all at one time, and I'm glad there's no quiz. But I have a couple questions. Earl had from SBDA had a couple questions he sent to us yesterday. We'll start with those. And Aaron, you might want to unmute Earl if he has any thing to add from this. The first one, his question is, and you talked a little bit about the challenges as it relates to keeping employees employed and things of that nature. But if your business has been closed due to the government closures, what is the, as it relates to paying out payroll from the PPP, is it better for you maybe to have not furloughed people, or will you be counted your 8 weeks after you're back in, back online, able to operate your business? What is your understanding as it relates to that? And Earl, if you want to elaborate on that, please feel free to.
So I read the statement from the SBA this morning because I was asked that question. There seems to be some confusion. Is it when I deposit the check? What is it? The actual wording from the SBA says that your 8 weeks start when the loan was issued. So that's when your time clock starts. I've seen some various things from banks. If you're worried about the clock, talk to your banker. Can I delay taking payment? But when the loan is issued is what the Treasury's document says. So if you're shut down, remember, if your business is closed, it's closed to the public, right? It's not closed to employees. So find things that your team can do. The one restaurant owner we work with said they're going to clean the kitchen, they're going to paint the walls. I got stuff that I can have them do, even during the time when our doors need to be locked. So I guess in short, I see no way to delay your 8 weeks. And if you're going to pay them, get them to do something. Find some things that you've had sitting around and projects you need done, so that you get, you got essentially free labor here, right? So find some things for them to do that will pay dividends for you in the future, even if there's not a customer walking in the front door.
Earl, did you have anything to elaborate to that?
Yeah, that's basically the answer that I gave them. The primary concern was this was a medical related business, so they wouldn't be able to send their employees into the business for fear of contaminating the area. So they, at least this is what they were telling me. I'm not saying how sensible it is. That's just what was being put out. And therefore, they were not going to open the doors to their employees either. And the conversation immediately went into how do we make sure that they're not on unemployment as well as receiving PPP and so on. So it's just a lack of complete detailed outline guidelines right now for the forgiveness, which I think we'll get those eventually, but the guideline that you gave, I think, is in line with the same narrative that we're getting.
And Earl, that kind of leads to your second question, which was about how you show that employees have stopped receiving unemployment as it would relate, to, because you can't have the double dipping, so you can't be paying an employee and they're receiving unemployment. So Scott, I guess part of that from an accounting standpoint is going to be important, as you said, to have that relationship between the business and their accounting firm to be able to keep those records pretty straight to then provide back to the loan officers and things of that nature.
Yep, and if the unemployment agency, deployment of employment workforce, wants certification weekly from the recipient or the employer, or maybe both, that there is not work for that person to do and they're not receiving income from another source. So you can send a certified or a statement under penalty of perjury to the Department of Employment Workforce and say, hey, I've offered this person a job, you need to know, but the employee should be notifying DEW all the same that they're now employed and receiving a paycheck.
Great. Another question I had for some of the small, you talked about some of the other ways that you can other tax programs that you can utilize. What is there a difference between if someone is a sole proprietor as opposed to if they're a LLC, a small business or whatever? And I'm not the expert on the alphabet soup element, but I know there's a different types. Are all types of entrepreneurs or small business owners able to do that, or is it harder if you're a sole proprietor and you file as part of your own income tax as opposed to as a business?
A lot of these credits are focused on employers, right? So it's people with a team, or the focus of the legislation very much seemed to be keeping employees employed, keeping them off unemployment. But if that wasn't possible, also beefing up unemployment. So if you're self-employed, it's easy to feel left out in the cold here. Right? I mean, you do qualify for the PPP if you're self-employed. Say if you're profitably self-employed. I talked to a couple yesterday who unfortunately have been operating at a loss the last few years, and despite a lot of things going on, just don't qualify for the PPP. So it's more difficult if you're self-employed for sure, or a single owner LLC. But there are few of these things available. So the tax changes I mentioned with improvement property and the net operating losses will apply to everybody. Self-employed can get unemployment. If your self-employed situation has gone to where you're not making money, you can get unemployment, and you possibly can qualify for the PPP.
All right. Thank you. I just want to jump in here real quick and remind everyone to please introduce yourself in the chat area if you have not, and introduce yourself with your name, your company, your location, and something you want to share about what you've learned over these past few weeks. And also, if you have questions, there's a little Q&A box, little Q&A, I guess, word bubbles at the bottom in the center. If you just click on there, there's a box and you can type in your questions. And I know y'all are a very curious group, so you have questions, even though Scott gave us lots of stuff to think about.
Aaron, I have another question for Scott.
Okay.
While we're waiting to see who's going to be the first one, Raj, or I'll call out 3 or 4 more people, Thomas maybe. Scott, what about for the tax filing year for 2019 was delayed from April 15th. It was supposed to be a couple days ago. So how is that going to push back for some of this work, and for small businesses and for entrepreneurs in terms of future filing dates that are required? Do you know kind of what that's going to look like?
A little bit, and it's kind of all over the place. And so different different types of taxes have different due dates. For instance, individuals, your payment and your tax return, you can substitute July 15th for April 15th, right? So anything on an individual level, just about anything on an individual level was pushed back. So that's estimated payments for the first quarter, estimated payments for the second quarter, your individual tax return, your state tax return, those have all been pushed back. You've got to watch things like employment taxes, sales taxes, and some of those things, especially if you operate in multiple states. But for South Carolina specifically, they're looking for those things to come in on June 1st. So you got a little bit of a reprieve, but not as long as the individuals. So most of that's been pushed back, but you definitely got to pay attention to the specifics of what tax you're talking about.
Along those lines, but wait, Dean, there's a question. Do you want to do that?
I do see it from Claudia with Arco Ironworks in Anderson. I'll just read what she says. Right now, we are closed due to slowdown from coronavirus. We have welders and have to send them home since we're not able to site jobs due to the lockdown. So I don't necessarily see a question, but I guess the point would be that they have furloughed their employees. So in that scenario, they would not be eligible for the PPP, correct? They would be to go on unemployment. Is that correct, Scott?
Well, they might be eligible for the PPP. I guess the question is, if they got it and applied for it, then you've got to deal with those things. If not, then possibly we can consider things like the employee retention credit or the deferral of payroll. It kind of all depends on what path that ARCO has decided to take, right? Because they are mutually exclusive.
Okay, yeah, she says they did apply and are waiting to close on the loan. So in that particular case, they should not have furloughed their employees because they're hoping, assuming that they will have the resources to cover them. And as you said earlier, if they do furlough the employees, then the amount that can be waived would be reduced and they would have to pay on that, correct?
Well, it's okay if they furloughed them in the past, right? We can't go back and change what we've done. But once you close on a PPP loan and your 8-week clock starts, you got to get them back in and working.
Now, what if, so you have your 8-week window and you paid your workers, you get the credit for the PPP, and then it's July and your business has not come back to the point you thought, and you have to furlough employees in July, but you had received the PPP earlier. Is there anything related to the PPP that would prohibit you from being able to then lay off or furlough employees in July or August due to continued lack of business?
Not that I'm aware of, and the PPP itself doesn't prevent you from laying off or furloughing employees in and of itself. All it says is if you want forgiveness,
right,
you need to maintain employment levels and pay rates during the 8-week period after the loan is written. So, you know, there can be an interesting combination of I laid people off, I hired different ones. We're not even sure that there's limits on who you could hire. Could you hire someone else, even a family member to work? There seems to be a lot of things that we're not sure if they're not expressly forbidden or haven't been. Are they allowable? Not sure.
Right. I think that gets back to the we'll figure it out over time. Let's see, it seems like we've lost Erin. I don't know where she disappeared to, but let me see if we have any last questions. I guess, Scott, to kind of wrap things up in the last minute or two, if you had two, remember these are primarily folks who work with small business owners. What would be one piece of counsel, just in general, for them to share with small business owners and entrepreneurs as it relates to the accounting elements during this time frame? What if there was one kind of nugget to make sure that they are doing? What should they share that with them?
Well, if I may, Dean, I may expand from 1 to maybe 2.5. But I think the number one thing that business owners need now more than ever is just some encouragement and some hope. I think that's the number one thing that we're seeing is a lot of people are down and frustrated and confused. And the number one thing that I think can help business owners is to be an encouragement. So as far as taxes go, I would say to Claudia, or maybe even some others that haven't gotten the PPP loan yet, what you ought to consider, do you really want the PPP loan, right? Because what I've given you is 2 very different scenarios, and some of it is an area of unknown, but right, I could get the PPP and I've got all these issues with shutdowns and sanity in my medical facility and all these things that come into play, yet I have to maintain staff and pay them. How is that compared to using that employee retention credit and payroll deferral? That might be a better thing, right? Don't count that off. Just because we've all been told the PPP is free money, it might not be, and it might not be as good. Like that employee retention credit could be $5,000 per employee of free money, right? That's a good thing, and you should consider it before you close on that loan. So I think those are probably my top 2. If there's anything else, I would just say be diligent in this, because it takes work every day for us. We're continuously learning. Not going to say I have all the answers, because I don't, but we're trying to do what we can to keep up with what comes out and make the best decision we can every day.
Great, thank you. And I would say, as with 10 at the top being a nonprofit, but a small business, much like many other small businesses, I think having relationships with your accounting firm and with your bank has, for us at least, been critical during this time frame. So I would say maybe another piece of counsel to small business owners, if they don't already, is to make sure that you build a good rapport and a relationship with your accounting firms and your banks, because while this is certainly an unusual crisis, there are many crises that come up, and having relationships is certainly very critical. So with that, we are almost to the end of our hour. So I want to thank everyone for being part of the call. I will let you know that we have, as Aaron said, we have plans for 3 more weeks of these calls, and then our quarterly meeting for the entrepreneurial ecosystem that we typically have. We are waiting now to decide if that will be an in-person meeting or a virtual meeting sometime in June. We're envisioning it being kind of a debrief and a focus around what has happened from the virus and all these other things. We're hoping that we will get to break bread and be physically in the same location for that, but we will see what the CDC and others have over the next few weeks before we make that final decision. But again, we will next Tuesday at 1 o'clock have our next session, and we will be sending out the details about that very soon. But again, Scott, thank you very much for being part of that. Scott's contact information is here, and we will be sending a recap to everyone who has been on this recording of the session and his PowerPoint by tomorrow. So expect to receive that, and if you need anything else, please be sure and let us know. So with that, we are adjourned. Thank you.